Hi there, I'm Charles Goddard. I just wanted to give you a little introductory slide showing designations and basically that I do have some knowledge of the subject we are discussing here today. But I also want you to understand that 20 plus years ago I was in the same boat as you, not understanding which way to go and so on, and I had clients counting on me, and this forced me to embark on a study route that resulted in the designations you see. And I add the last one simply because I found from spending a lot of time with veteran market traders that book learning's one thing, but practical application is far more important. And that's what we're going to be working on in this video, on the in the book that I want you to take a look at, and ultimately the course that will be at the end of the day. You only need the book to, if you're going to spend a little time on that, you'll get all you need from it. There's no need for you to venture further as far as the course is concerned. Okay, now I've mentioned that there are three key elements to trading investing, and there are other underpinnings which we cover in the book. And but for now, if you take a look at these things as we go through them briefly in this video, and you come out of it and you say, yeah, I get that, then this is definitely the road for you. We're going to start with the simple chart setup and why that's important, the objective process, capital allocation, and risk management, which is actually the most important part of trading. What you're looking at here is my chart setup. As you can see, it's fairly clean, and the reason that I keep things simple is, one, that's really all you need, and two, I've seen a lot of people with very convoluted setups on their charts that I don't believe gives them, well, I know it doesn't give them one iota of help when it comes to trading consistently. What I want you to do right now is understand, one, that this simple setup is available to you. You can get this free on the internet through stockcharts.com, Yahoo Finance, any number of places. Plus your investment platform will have charting available on it. You may have to ask, because not everybody who works for these places, especially the banks, are aware that there is a technical aspect available on their very own sites. So as we look at this, the thing that I'm teaching is has to do with three moving averages. Now you can see those: green, blue, red. There's more about them either in the book or on my blog, which I'll tell you about in a minute. But all you need to look at right now is okay, if we say that the blue above the green is an uptrend, can you spot that? Can you see where the blue line is above the green line and therefore in an uptrend? Sure you can. And on the left side of the chart, can you see where the blue is below the green as the as this part of Apple comes to an end of a downtrend? All right, so next thing we're looking at is our trigger, which is either the price or the red line crossing above the blue line as the blue line is above the green. We always want to trade with the trend. Now you can see where that occurs after the bottom that takes place. As you move your eye to the right, you can see the red line crossing above the blue while the blue is above the green. This is our get-in point with obviously a little more detail explained to you, but you should be able to see that. This is what we're talking about. We're talking about a simple method, simple chart setup, and you can do this for yourself. Okay, one of the other aspects It's so important. I can't believe people don't pay attention to it. And that is your capital allocation and your risk management. I've said at the start of this that if you get rid of your losers quickly and let your winners run, you will be profitable even if you're wrong 60% of the time. Statistically, then you can be profitable. But having said that, I happen to know that if you lost on 20 trades, you would throw the statistics out the window and you would tamper with something. I know it, but you must not. And this is the aspect of trading that does not get enough attention, and that is the battle is between your ears. And so capital allocation, what I'm talking about there, and it's detailed in the book, is no more than 10% of your portfolio on any one trade. And when you place your stop loss, your risk on your portfolio should be no more than 2% of your portfolio. Now, what happens with that is as your portfolio increases, so do your percentages. If your portfolio should decrease, then those percentages decline. This is how you keep trading, so to allow those statistics to work for you. Stops, these are the stop losses, are explained in the book. It's simply a point that not usually, we put every single time we place a trade, we put a stop on our trade to get out because the price is crossed below a point where at which we think we could be wrong or we know we are wrong. Now that usually comes under support, which is also an element you need to understand, but it's not a difficult one. Support and resistance are not difficult. So you can use trailing stops, which are explained carefully. You do not need to be a riverboat gambler to be a consistent trader. So let's take a look at this recent trade that we had, and we have a theoretical trading exercise that takes place in the book, and it finishes April 30th. It started January 1st, 2020. That exercise continues on my blog as we keep using the same basic simple system throughout. We'll do this throughout the year and keep track of our portfolio. So we started with 100,000 theoretical dollars, and we're now, as of August 15th or so, we're sitting at 140,000. Now that's pretty good, and that comes mostly from one trade, which is what we've been looking for. We'll probe and probe and probe, and trades will come and go. They'll make little gains, little losses, and then when the big move happens, we're there. We take every trade that our process kicks out. So here you can see gold. Were we listening to the people with the headlines saying gold's going here, gold's going in? No, we did not, because we don't pay attention to those people. We follow our process, and here it is. In that big yellow square, you can see that the blue line is above the green line, uptrend. You can see then that the red line and or the price have crossed above the blue line. We are now in a trade. The specifics of that trade, i.e. you put in a stop buy just above the high of the candle that closed above the blue line. Now, the next step is we look to the left. Within the last couple of months, is there a higher price than that price just above the high of the candle that closed above the blue line? There is. That's resistance, and you can see it's a horizontal black line. So what we want is we want our little candle to close above that, and then we will be entering this trade. So you can see where that occurs. You can see the trade is triggered, and we put our stop just under support. The price marches up, our trailing stop marches up with it. The stock falls back, and we are stopped out with a $10 profit per share. That is about as objective and easy as you can get. And this is what you're going to do over and over again for 3 months, as you get a handle on this. And I should add that you can just keep using this, using the same symbols that I show you in the book. You're just looking at 5 instruments. You can keep doing this using this system, this setup, indefinitely, and you will do very well with it, as we have done. Okay, here we are at the conclusion of our little video. We've been through the 3 main components of trading, and what you can expect to find in the book. As I mentioned, the trading exercise that is started in that book and stopped on April 30th, 2020, the date the book was published. It is carried on this blog at bluestoneenterprises2020.com, and will allow you to see trades unfold per the method described in that book, with stop loss and details of how many shares were purchased within the capital allocation, and then when the trade is concluded by way of being stopped out, then what the result was, and the portfolio is updated. You may find that useful to watch trades unfold if there's still some things that you're not clear about. In the book, my email address is in a couple of places. You can ask me any question you want as it pertains to the investing world. And that does it for now, and I hope to cross paths with you sometime in the near future. In the meantime, happy trading.